Hi everyone, welcome to our market talk. Today we have Matt with us. It's been a really long time since the last time we talked, so I'm looking forward to hear his views. And yeah, so nothing major in the markets. We had some volatility, but at least from my signal perspective, nothing to be very concerned about. We'll see what Matt and Rafael thinks. So yeah, I'm sure we have a lot to talk about, and let's start with you, Rafael. So how are you, and what you see in the markets?
Hey, bye. I'm good. I'm good. A little under the weather, but I'm doing good. Yeah, of course, I put the title to attract people to listen to the show. I'm seeing some stuff, but like I mentioned in the tweet I did, it's for now it's just some clues, and it's confirming the path I laid out 2 weeks ago. So I'm going to go through everything as always. Quickly, what I did the past 2 weeks was I closed my ES long, NQ long, Amazon long, and Bitcoin long. I tweeted anytime I did a change to the PA. So if you watch my timeline on Twitter, you know. And I also opened a position in gold after closing it last month. So let's go to the screen share. Okay, just making sure I can see. Put that somewhere here. Okay, I'm ready. So I'm going to start with yes, as always. So again, you know, when I took all my positions and I got out on the 14th. So the reason I got out was I got two triggers. One was a sell on the daily on NQ, and another one was actually a buy on VIX. So my expectations on the previous show was we would get some chop and a move up with a potential top in Q1. So I didn't change anything. The arrows are the ones we had on the previous show. The only thing is, for once since a year and a half, I didn't buy this dip. So I got out here, and I'm not planning to get back in on the swing long. Yes, thank you. Or RTY. I'm not trading RTY, but let's say I would be interested because I get a buy. I'm not buying this dip. So the plan remains the same. I'm expecting this thing to continue going higher and at some point to top. I'm not sure if it's gonna be in December or in beginning of Q1, but I'm expecting this. It's been also the macro team are paying for the research. They are also they're also of the same view. So I'm not gonna go through their rationale, but their expectation regarding macro align with my view from the signal I'm looking at. So based on that, I decided not to take the shot and buy the dip here. I'm starting to see some clues, like I mentioned. So I'm gonna go through all of them, and then I'm gonna explain why I'm actually still expecting a move up before a top. So one of the clue I'm starting to see is actually the first 3 months going drastically down on many tickers. So if you are using Hearst in your dashboard, so because you can customize the board, you must have noticed that for many tickers, the 3 month Hearst here, which is the strength of the trend, or at least your chance that you get the trend that you currently have will continue for the day forward. So you must have noticed that it's going down. So I'm going to give you a few examples, like Amazon. So you can see the current 3-month Hearst is 0.65. We are coming off from 0.7 30 days ago, 0.69 15 days ago, 0.69 5 days ago. If you take another ticker like so Dow Jones Industrial Average ETF, same 30 days 0.77, 0.73, etc. You can see we are going down. Another one, I'm going to give you a few examples. I'm going to try to be fast. IWM, same. We are coming off 0.76. We are at 0.67. Another one, Microsoft, 0.75. See going down, 0.65. Last one, SPY. Yeah, okay, 30 days ago it was at the same time, but 30 days ago maybe we had a correction, I forgot, but 15 days ago 0.76 and here 0.68. So the strength of trend is, in my opinion, decreasing. Another thing that we have seen for the past few days is many caps have appeared. So of course I RT'd my signal. So some of the caps have disappeared, especially considering that small caps had a red day today. But I would bet tomorrow we're going to see those caps again. So they've been there for some time now, and they will matter at some point. Another thing, but this one I'm going to talk about is VIX. So VIX, you know, the 3 steps I'm watching before taking a bearish bet. We are still at step 1, but my bet is we are approaching step 2. So I'm not taking any bearish bet for now. I'm just less bullish with a conviction that we're going to get a top somewhere in most probably Q1. So I'm not committing to a swing. I'm just doing some day trade for now. One last clue that I mentioned also the last time was the CFTC net long positioning, which is, in my opinion, getting complacent. So you can see here this score, they are showing complacency. Of course, VIX is still, people have hedges. So the question is what happens in the next few weeks regarding those hedges. We're going to see. Then going to Europe. So DAX actually is holding trade and trend. So here you can see it's holding trade and trend, be it MFR or mine, the vola. But like I mentioned last time, I'm seeing the volatility of it increasing. So best case, I would say chop, but yeah, I mean, it's another clue for me. Europe is definitely not is definitely not bullish. CAC, so this one broke. And so trend broke, vola trade broke, and the volatility is increasing. So not good. FTSE, this one is chopping. It tried to rally, in my opinion, in the back of the US equity rally, but in my opinion, it's just chop. I mean, you can see our matrix is about to top. I think this vola is going to increase again there. Nikkei looks the same. So now I'm going to Asia. Nikkei looks the same. It's a chop. Now let's go to the macro tickers like DXY. So DXY is exhibiting a cap for some time now. We have a cap since the 14th of this month, and it will matter at some time in the future. If you have access to the script range, on trading view, you can easily check the previous instances when the cap happens and what happens then. So you had one very recently in the end of October, and what happened was slight sell-off, let's call it consolidation before we had the next leg up in the XY. So my expectation is this. I'm expecting either a consolidation, either a sell-off in the XY. I don't think this move can continue considering that we currently have a cap. Again, you can see any instances when it happens using this script. So why is it important? Monitor the correlations. For now, I think Vi is going to go over that, but for now, the dollar, I don't think it's a danger to the equity rally that we are experiencing. But again, I think at some point it's going to matter more. So now going to VIX. So VIX, we are retesting trade today, I believe. Daily trade of Vola. Yeah, so around 14. For now, it's not a big issue. I mean, what we want to see, and this is step 2, is we want to see actually trend go below trade. So we want to see both cross. We are not there yet, and you can see matrix here. It's okay. We have some volatility, but it has room to go down. So I'm expecting no issue regarding VIX, at least until we see a cross between both. I noticed that considering that we were coming off a really high place in the trade of volatility here, the previous instance where we got this kind of setup was July of 20. So you can have a look. Very easy. Up. Let's see. Let's hope it's gonna. Yeah. Yeah. Did I type the right? Yeah. Okay. Let's hope so. Yeah, that's one. Okay. So this is the kind of setup that we are seeing now. Exactly the same. So we have trend above trade and volatility starting its move down. So my expectation would be this kind of setup. So I will encourage everybody, if you are using my trade and trend system, script, to go back to July to September 20 to see what kind of setup we should experience. Now to CL. So no change on CL, just Chop City. Chop City, yeah, no change. I mean, until we see trade and trend cross, it's just short any attempt that you get at the top of the range, or at least on the attempt of trend. So it's not worth talking about. Now to gold. So if you are using my script, buy the dip daily, so you bought on the 14th of November. So I started to scale out. I had the target at 2730, but unfortunately I missed it. And yeah, some days you are not in front of the computer. So I can tell you, I was not expecting this kind of sell-off. And yeah, starting to load back up at 2645. I did some more 2630. I did some more 2615. So I have a stop somewhere below 2600. But now I need to see this thing I need to see this thing go up. So I'm watching the hourly closely. I want to see gold start to behave in a bullish manner in the shorter time frame. If it doesn't happen, then I'm going to get stopped out near break even below 2600. But it triggered. For me, this is the usual pattern. You get a retest of trade trend, you get a sell-off to wash out late longs, then you add some more, and we should get back up. So I'm watching. I have a stop anyway. You know how I play, and I'm gonna keep posting on Twitter anytime I make a change on the position when I add, etc. Now let's go to Bitcoin. I had a target of 95 to 100K. Also mentioned it 2 weeks ago. We went, I think, to 99K. They really pissed off the guys who were expecting 100. Not very nice. I got out at 90K when actually I got the signal for NQ, VIX, etc. Thinking, okay, I don't need to bother myself with this last ramp. This is a trigger to get out, so I got out. I could add on the retest of trend. Okay, I'm thinking we should get at least to retest trend. So I'm watching for 87K to see if maybe I can have fun for a few days. So I'm of course I'm less bullish. I mean the bull run was from here to there. I'm gonna see. Good chances I'm gonna buy 87. The question will be if I'm gonna get out there, because this is the top, which is of course something I'm thinking about, or if I'm gonna hold to see. Okay, I'm almost finished. Now to yields. So no change regarding volatility for yields. For now, we are still far from trade on the 2-year. We have room to mean daily trade also. The 10-year looks the same. We are still below trade, still far away from mean daily trade. But yeah, I put the box watch reaction there. I want to see what happens if we go there. 30-year looks the same. One thing that could that makes me think is when I'm looking at Europe. So I'm going to show you what happened in Europe when this happens. This happened. So if you look at for example, the German 10-year, went to trend and broke it. France is actually experiencing the same thing. For now, it's holding. So sure, the macro situation is different, but I thought it was interesting to show you what happened, because both France and Germany behaved like the US in September when we switched back to bullish trend, and currently they are breaking trend. Will the US do the same thing or not? For now, volatility is very nice. Yields look bullish, but watch the reaction there between the trade and trend area. If we start to see a breakdown, maybe there is a big change in macro coming. So then again, correlation will matter big time. Okay, guys, I hope it was interesting.
Thanks, Rafael. So, Matt, really excited to have you here. It's been a while, and really looking forward to hear your thoughts on your markets, and not only. So, how is everything and what you see in the markets?
Good. Again, I don't think you're looking forward to it because I'm a technician, and I know you two think that's voodoo science. So
Well, let's see.
yeah, I'll just go through basically, and I'll explain my way of trading. I'm more of a short-term trader. I don't day trade anymore, even though I loved what you had taught me, Vi, in regards to I guess my brain is killing me, Sierra chart day trading, and that method. I still use that, but for the most part, I've become a swing trader that relies on my own methods of determining basically a medium-term trend. And what I see and what I'm in right now. Can I share my screen?
Yes, you can. You can
Yes,
press
of
share
course.
at the bottom.
Okay. So let's see, where are we? So I will go here. And can you see that?
No,
Not yet.
Let
Nope.
me try again. Sorry about that. Out now?
no. At the bottom of the Zoom, you should have a share. It's
Oh, there we go. Okay.
yeah.
There. Okay.
Yes.
Okay, you can see
Yes.
this then. So right now I've got I divide my trades up between ETFs and individual securities that basically need to have a minimum average daily volume in order for me to trade because I'm trading option spreads. I'm trading debit spreads, either put or call spreads. And so my positions right at this moment, I got out of one that was in XLE, which is XME, excuse me, which was metals and mining. I entered a swing trade down here and saw a couple of patterns that I didn't like, and it didn't look like, and I mean, it could still fly, but I took a nice little snatch out of that market and closed that trade today. XLI is one that I'm still in swing trade again down here is where I entered it after it broke above these. This is just a simple exponential moving average 21 day and entered debit spreads with that. So that's my other trade. So I'm long everything. I'm not short anything. I also have a very correlated trade to XLI and Caterpillar. Same concept. It broke down and recovered. And I think you guys, or at least Raf, had seen this Dayforce trade I got in. Um, it's a fierce looking market that looks like it just wants to moon, but it's a very light position. So I've got three trades right that are all bullish right now. I'm looking at one potential bearish setup, and that is in the healthcare sector. Um, and for that, I'm basically waiting. It's reached a couple of my it's overbought on two of my indicators down here, and is trending bearish on my short medium term trend, and it's also returned to its 21-day moving average. So this is something I'm looking to enter, but it hasn't reached my trigger yet, which would be the definition of that for me is when it returns back below a previous day's low and closes there. So that's it in terms of where I sit right now in positions. I agree with Raphael. I'm going to move over to just the macro sides of things, and my crude oil is again going to be technical, but it's not doing anything. I mean, I'm sure you could trade these whipsaws on the dailies. I'm not going to get involved because I've tried to trade just the ETFs in this, and they just jump all over the place. They tend not to trend as well as I like them to, and that includes XLE and XOP and OIH. Um, uh, Stocks in general, ES, NQ, and RTY, the three big futures markets, I'm bullish on just because I mean they're not showing any signs of breaking down. They're showing signs that maybe they're getting tired, but I'll wait to see for that. And in the meantime, I'll scale back my positions as the days go on. My biggest one that I have not great conviction with, but if you look at 10-year futures, I'm seeing a series, and in technical terms, this is what people look at, a series of higher lows throughout the last year, basically. And of course, this would have to hold if we're to get more bullish on treasuries. But I did actually, in a couple of accounts, enter some 2 years and 1 year positions in the treasury markets, just on the shorter end. I'm not going to go into duration because I don't quite trust that they've crushed the inflation yet. And the time will tell, and as well as the chart. And right now, though, the chart looks like a pretty good entry from a long perspective. It's not bullish trend yet for me. This is a daily chart that I'm looking at, but it's got the signs that it wants to poke its head back up, and I'm guessing that the powers that be will want that with their tools that they can use. I'm not sure they can control the long end as much as they can the short end, but they're probably going to do their best to get this thing from keep this thing from cratering and going higher in terms of yields. Um, the other one would be Raphael. I was the same with you. Is I got back into gold down here on the swing, and yesterday was just a brutal day. But it was a brutal day for several securities. It was a brutal day for gold and the dollar, and it just made no sense because I'll go to my 5 day correlations here real quick, and I'm going to go to 2 days ago. This chart right here, the correlations were just lined up between these macros. And I have TLT, SPY, QQQ, IWM, gold, Bitcoin, and oil in the frame of BNO, and then also the dollar. So TLT was the only one that wasn't acting right in terms of being correlated all across the board. Yesterday, these correlations just went way out of whack in terms of what I look at in a 5 day, so a shorter term correlation. And that was obviously because I think we had gold and the dollar really acting up. And then today, and I'll explain these real quick, this is my chart for today. In other words, after today's activity, that's 1 week ago, and this is 1 month ago. So I can compare, where things are today against where things were. And then today, again, just extreme differences in these short-term correlations. So I think something might be bubbling beneath the surface short term, as far as I can see, which leads me to believe that we may have another pullback coming. I wouldn't be surprised because we've had a pretty good run. So in the next few days, and especially since we're entering the low volume holiday period, more than likely scale back a lot of my positions just to wait and see because there's always going to be an opportunity to get back in. I'm not worried about that, and I want to protect what I have on the table right now. In terms of let me go back here. I think I went through what I saw. Yeah, Bitcoin again just looks like it's correcting, and I think it will probably return back here. I would say 85 would be my target in terms of when I'd start to enter trades in Bitcoin. But I don't see any danger there in terms of if you have core positions on the long side. My next one would be my volatility signals that I track, which are my term structure. And the term structure is basically got a number of ratios that I look at. And what I'm seeing now is today, you see November 26th up here is all green lights, which we've had in the past, a little bit of a danger signal back in early October. And that was just because we were looking at the election, I think, for the most part. And you did see a lot of things whipping around. But generally speaking, when we go all green, it means that it's a risk-on environment. And so these could change just slightly, but it would only be a couple of these ratios. And if that's the case, then what I'm doing is looking just again for a pullback to enter swing trades on the long side in basically the macros of QQQ, SPY, and I don't trade futures, so I trade just the ETFs. I'm not as complex as Vi is in Roth. So effectively, that's what I'm looking at. But right now, I'm still long. I don't look at anything macro for the most part. I let the markets guide me because to me, I want less information. I want to just focus on singularity of my system. And right now, they're saying that things look good, but I certainly wouldn't add to longs here because we've definitely had a good move. But again, if I do enter a short, it's going to be something that's bearish trend on my side, which is going to be the only sector I have that's bearish trend right now is XLV. Beyond that, XBI, which was the biotech sector, looked a little bit bearish. And so I'll move quickly to just where I see sectors right now. Every day I get my analysis through Python and download it and then put it in a spreadsheet. And I look at it in my different trends that I follow, which are short term, extra short term, medium term, long term, and then extra long term. I'm just seeing a lot of green here in the sectors, which means they're basically mostly bullish. The lone exceptions, as I mentioned, if I look through these sectors, would be the weed stocks, which I'm not going to trade because they're illiquid, and then XLV. GDX is one to watch out for. It's gone bearish on my signal, which is the gold miners ETF. Beyond that, junior miners as well, GDXJ. So for sectors, everything's solid green, as you can see, from tech mainly on down to utilities, metals, like I said, retail, all green. I also do this for 100 stocks that are, it's a combination of the S&P 100 and NASDAQ 100, and I do a deduping, so I have 100 stocks that is combined within each of those. And you can see again that my trends are mostly bullish versus bearish. There still are some bearish trades, but when the macro, when the big ETFs are trending bullish, it's hard to get into any bearish trades unless you've got a solid signal. And then I also, and Rob, it was funny that you were talking about foreign stocks because I just track the foreign ETFs, and I'm going to say that my version of this is because of the dollar strength is crushing these foreign ETFs. The actual indices within the countries might be bullish, but the ETFs are getting whacked because the dollar strength is really hitting them hard. So it's really tough to trade these. I mean, you can trade them, but when you have the underlying acting, like you said, with Germany still bullish, and then you have EWG. Let's see if I can find EWG up here. I know EWQ I have as bearish all the way across. EWG might be still kind of in a neutral position, but for the most part, my signals are saying bearish. So the dollar is killing the ETF, so it's tough to trade those unless you have kind of a neutral dollar. But the dollar is obviously a rocket ship right now, so it's tough to trade against that. So effectively, that's it for me. I don't really have anything else to share, but that's more or less where I'm coming from right now.
Yeah, quickly, Matt. Yeah, the correlations were totally out of whack, and one of them today, uh, I hope the people watching the correlation noticed, was the inverse correlation between TLT and gold, which is absolutely insane.
Yeah,
And
yeah.
I'm like, what the hell is happening? It's like, why are there, why is the correlation like that? So I mean, so I guess you saw, and what do you think?
You know, I don't know. I'm totally confused by it because TLT generally lines up with everything, and it's been when I look at its correlation, especially if you look longer term. I've got let's see, is this today? Yeah. So if I look at let me share this real quick. If I look at a 63 day or a 3 month correlation, yeah, I'll share this. I've got, can you see this?
Yes. Yes.
So again, you'll see this is 63-day correlations for today. And again, you'll see that TLT is just the lone standout, and it's just there's a battle going on because it's in my 63-day correlation. It's within my not so much in the later stages, but also a 1 month correlation, and then the 5 day correlation again is really out of whack. So I tend to focus on a shorter term, but when I see the longer term looking like that, it tells me that there's something under the surface that's bubbling, and I'm not sure what it is.
Yes. 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 Yes.
My view would be that dollar has something to do with that TLT and gold correlation. But again,
That would make sense, yeah.
yeah. It was really interesting, and actually, I agree on basically everything, and I wanted to touch on international ETFs as well. So, yeah, so I'll share my screen. Yeah, Matt, if you want to share something else, otherwise, unshare your screen.
How do I do that? Unshare.
Yeah.
I don't see an unshare.
I did it.
Yeah,
I did it for you.
Raphael did it.
Yeah.
Okay.
Okay, good.
Now I'm gonna block you.
Yeah, so I wanted to start with something that I was talking about for months, which was tech underperforming ES, so NQ underperforming ES, or SPY outperforming QQQ. So and after the election, we had this nice spike up, and it looked like nothing is missing, because the only thing that was actually missing was that ES made new all-time highs and NQ was lagging and ranging, and after the election situation changed. But now it looks like tech is starting to lag again. So we had this nice move after the election, but this week and last week we had some volatility, which is again is not changing my views regarding me being bullish. But I think, like Matt also said very well, that markets may look that maybe they want to take a break. So I wanted to start from this chart, which is a SPY QQQ spread. So very simple thing. If chart is going up, basically SPY is outperforming QQQ. And when this, let's call it quote unquote, crash happened in summer, or volatility happened, we all saw that ES caught up quite quickly and NQ was lagging. But now we are struggling again. So what I want to see this spread reversing the direction now and turning bearish again. So I want NQ to catch up, and I'm monitoring correlations on that. So that's the only thing why I would say that market kind of wants to range bound a little bit before it goes up, and I still think that it will go up to the year end. Like Raphael said, he maybe is expecting the top in Q1 or so. Actually, I'm on the same page totally. So this one, I wanted to say that watch tech stocks, because we have a lot of signals in tech stocks that are quite concerning. I will go back to these correlations a little bit later. But like Raphael said, now in stocks like Apple, we have Hearst exponent, which is not as high as it was before. I monitor Hearst exponent on multiple names every single day. What it basically means is that even though trends are strong, but they are getting weaker, and weaker trends doesn't mean that now everything will reverse and go to hell. It just simply means that it can be harder for these for the momentum to continue. So even though longer term Hearsts are unsurprisingly really strong, but the 3-month Hearst exponents that we have here, 64, I will remind and I will repeat what Raphael said, that before that we had a 3-month Hearst exponents of above 0.7, which was really strong. So they are going down, but that's it. Basically, watch stocks. That's the only reason why I'm not mega long right now, because I think that we had an awesome run, and we see some signs that maybe market wants to take a break or even correct a little. So this one, then Bitcoin, of course. Hold on, so this one. Bitcoin now is in a very interesting place if you see the ranges. And actually, if it reverses and goes up quickly, this is the spot, which is basically regular term low of a range. We are in really significant short-term territory, but actually I don't think that that's the most probable scenario. I think that Bitcoin will correct somewhere in this area, and Raphael mentioned maybe 87. Matt, I believe, was talking about 85. My worst case scenario would be even closer to 80,000. But yeah, so now I'm watching and I have alerts on Bitcoin below 85, but I don't want to buy it at 85 unless there will be clear reversal signals. I actually wanted to retest the neutral area, or to at least go close to that neutral area. Of course, for those who just are buying every single dip and think that Bitcoin will reverse and go up very quickly from a regular term range perspective, this is the time to buy Bitcoin. But from my analysis and trading, when it comes to not day trading futures, but everything else in portfolios, I tend to give more weight to longer term ranges, and we are not in the middle. We are close to the middle, but actually downside is higher than upside. And when we have signals like this, I'm not very confident in pressing the buy button, especially that we had a capped upside for quite some time now. It's not capped, but still you can see that the differences are quite huge. So yeah, keep that in mind. That if it reverses quickly, so quickly it means really tomorrow or day after tomorrow. If Bitcoin consolidates here, then it will reverse here. If not, I would wait for closer to 80,000. But I think that 80,000 will be, if it happens, that would be a significant and great opportunity. Now, I want to show something from correlation perspective, something that is not what I'm talking about all the time. So as you know now, custom correlation tables also are available on MFR. So if you use MFR, you can quickly do custom tables like Matt showed and like I show all the time on my different dashboards. So now everything here is available on MFR. So regarding Bitcoin, yeah, basically this table, this small correlation table with a couple of Bitcoin ETFs would be nothing interesting and would be nothing to talk about. But in the short term, I noticed that quote unquote Bitcoin is the hedge. What I mean by that we have a negative correlation to SPY, but in order for it to be more important, we would need to see that in longer periods as well. So, and if this is not happening, so yeah, first of all, I will go to the lowest I go, which is 5 days. I always start from 10 days, then, and you can see that it's not happening anymore because the short-term correlations already change that picture. But what is important is to watch a 30-day correlation from Bitcoin to SPY, which is and the changes in this correlation, because if short-term correlation will come back to positive territory, then basically it's all about the S&P and other stocks regarding Bitcoin. I know that there will be plenty of people on Twitter who will say that it's not the case. Well, it is the case. But now it's interesting. That's why I wanted to touch on that. That basically now from the 10-day correlations perspective, basically Bitcoin is behaving inversely correlated to the SPY. And also this international correlation stable. So it was great to hear that I'm not the only one that found it really interesting. But I wanted to touch on Germany, which is, of course, we all know that the main narrative and the main reason is, of course, what is happening with the United States dollar, which is no surprise in the international space. But for those who have a diversified exposure to the ETFs, international ETFs markets, actually, Germany is very interesting because on a 10-day perspective, it has basically no correlation to SPY. And it has a, no surprise, very, very strong negative correlation to the dollar. So if someone wants to add some short exposure or just to diversify their portfolios and are looking to add into some international positioning, Germany looks very nice from that perspective. Other than that, Germany doesn't look very nice. That's why I'm suggesting it on a short side. But as a candidate to find a place in your long-short portfolio or in your diversified portfolios to reduce overall correlations, Germany now is the key. I'm looking at Japan, but Japan now is not, for me. It's not a buy, not a sell. I'm waiting for some more signals because I really like Japanese markets and I trade futures quite a lot. What's the symbol on TradingView? On TradingView, it's this. But this picture is not something I would want to touch on that. So as you know, I day trade futures. So for day trading, it's a totally different story. But for the PA, I watch futures markets and then I add exposure with options on ETFs or ETFs. Of course, not all ETFs are liquid enough and not all ETFs have options, but it depends. So I'm looking at the Nikkei and actually same story as with Bitcoin, not trend-wise. The trend-wise is choppy as hell and it doesn't look really good. But the same story as with Bitcoin is that I wanted to go closer to longer term range low. That's very important for me from that perspective. And finally, all the ranges are not counting in what happened in August because before that longer term range was just really crazy. But some people have this thought that if we had some extraordinary moves that are totally not normal and are not likely to happen again, that you should clean the data and remove those. I never remove anything. It happened. It is real. That's why we had all this very, very crazy range of probable outcomes. So now that range is not that crazy, and I would really want to see Nikkei falling more and then showing signs of bouncing back. So yeah, from my portfolio now, I don't have any overnight positions. I'm looking at a lot of things, and of course, every single time, usually I start the show from this ticker, but today I will end my talk from XLU. So I always watch XLU as a indicator, as a signal of let's call it capital flows, where the money are flowing, so defensives or not. And actually, I'm pretty surprised to see what I see now, because I thought that all this rotation ended with the election. Basically, that if you watched our market talks, you will remember that basically I was talking about the science before the election, why this rotation may be over, and then after election it looked like yeah, definitely. But no, actually XLU is getting a bid, money is flowing into it, so watch that, because one thing for sure, well, not for sure, but with quite a strong probability is that if XLU continues going up, tech stocks will struggle. And then what I started, if tech stocks will struggle, the bullishness of this market will struggle as well, because like I said, now there is no reason to be bearish or even neutral. Now all the signals say that it's risk on and everything is bullish, but watch XLU, because if XLU continues to go up and correlations will remain normal, by normal, I mean that obviously defensives are less correlated. So that risk-on picture can actually go to the pause mode, and markets can really decide to take a break. Yeah, so today I wanted to focus more on the signs why I think that the market can stop for a while, but other than that, and all other signals and all other important assets and sectors and markets are bullish, and there is no reason to spread this bearish these bearish talks and expect world to collapse. So no, I mean, world will not collapse, at least not in December, and I expect one of the two. Either we will continue to grind up from now, or before continuing to grind up, maybe we will range for a while. So yeah, this is what I wanted to touch on today.
Well, yeah, one of the reasons why I entered XLI is because the industrials, and I was looking at QQQ as well, and noticed the exact same thing. Is the industrials, there's a rotation that's happening out of tech, and I looked at both IWM and XLI, and both of those stood out as the better indices to do the swing trades in. Industrials definitely are showing really strong looking charts.
Yes, correct. From my analysis, how I compared these, I just found XLU to be more reliable, at least in my process. I watch them all, but usually XLU is for me the one that, oh, if something is happening there, oh, okay, interesting.
Yeah, and it's interesting that XLU is kind of ignoring rates on the long term or on the long end, because generally speaking, XLU is almost directly correlated with that 10 years.
Absolutely, yes.
Yeah. So maybe that's the tail wagging the dog, and people are putting money into utilities, expecting rates to come back down. I mean, that's a possibility, obviously.
Yes, of course.
Yes, the current scenario that we see being spread is dollar has topped and yields have topped. Bonds have bottom. So currently, this is it's all over Fintwit, right?
Yes.
A lot of people are trying to catch the top on on dollar currently. And I don't know what's your view on that, Vi, but I'm thinking actually euro can go a little lower and dollar can go a little higher, but just for the
Yeah,
euro,
so
watch the euro USD. That's why I'm asking.
Yeah. So because both of you already basically covered dollar and everything, and I had nothing to argue about or to show a different view, so I just skipped on the dollar. But basically, wait, I'll open my chart. Basically, it's very hard to believe now that when it comes to euro, that this sell-off will just stop and everything will reverse and euro will be 110 again. No, at least not in the short term. So from the signal perspectives that I see, that even if dollar, so let's say UUP or DXY, doesn't matter, continues to go higher, there is not much left in the short term for it to go higher. So, and actually, it would be very beneficial for overall bullish view, because actually markets need the dollar to at least stop for now, for a while, because otherwise, first Europe will continue to crash or just to trade very weakly, and then very weak, and then it will roll into other markets as well. Of course, markets are great at adjusting and adapting, but in the short run, in the short term, basically now what's one of the things that is actually needed for overall picture to become even more bullish is for dollar to at least stop. So I will definitely not predict the euro below 1 or 80 cents or whatever, but I think that we had this move. Trump yesterday announced also something about those tariffs on some other social network, whatever that is. I think that was expected, and that's why, for example, at night we saw that volatility in S&P and so on, and everything just went back, because actually that was totally expected. So I think that overall rally in dollar and collapse in some other currencies, it already happened. We have election results. Markets know what to expect. Unless something unexpected happens, I think that this trend should also stop. Yeah, but no, I'm definitely not calling dollar going back to pre-election levels or euro going. No, but I just say that most likely market balance itself out, and maybe it's the time to stop.
Yeah, I'm happy the dollar is stronger because I'm going to Mexico in a week. So it's
Yeah.
cheaper cervezas.
Oh yeah. Oh, yeah, cheaper cervezas are always good. That's why I moved to Spain. Yeah, because beers in Lithuania are really expensive. Well, sorry, Northern Europe is compared to Southern Europe. Not everything up north is way more expensive. So now I'm living a lot cheaper life.
A lot cheaper, yeah.
A lot cheaper.
And the thing to think about with the dollar, if you go back to mid 2021 and watch the rally through 2022, it was 26% in a currency, which is almost unheard of. And I'm not saying that's going to happen now, because there was COVID, there was all kinds of strange things going on. But don't be surprised, when you see things happening, if it decides, like if the dollar is, because there's so many people out there that especially on Twitter X, that just say dollar dead, dollar dead, dollar dead. And look at the correlation between the dollar and Bitcoin. If the dollar is dead, then Bitcoin is dead, and Bitcoin is not dead. So it almost seems like they're a pair, which a lot of people have been talking about too, that it might be the replacement. Who knows?
Yeah. Even if it's not a replacement, if in the future there is really some stable coin, crypto coin, whatever, which will be used as some sort of replacement, it will still need to be tied to something. So I mean, there are not a lot of options, and it may sound crazy, but Bitcoin is one of those options that it can be tied to. So, yeah. Of course, world doesn't need a global currency which moves 20% in a week or whatever, but yeah.
Especially the reserve currency.
Yeah.
We have no questions in the chat. I want to mention very quickly that we currently have a Black Friday deal that will run until Friday on the Elite subscription. The Elite subscription gives you access to 150 tickers, also to the crypto sub, and all the perks that you get with the correlation, CFTC positioning, the scripts for TradingView, also the API to create your own stuff using Python. Regarding the scripts, by the way, so I've started to post the 3-minute buy the dip script that I promised. It's gonna take time because the TradingView team is very difficult to deal with. And I'm also gonna remove the daily buy the dip script that is currently free and move it to the MFR behind paywall page. So I just want to warn users, the scripts that you guys used to buy Bitcoin at the bottom, because it triggered right at the bottom, and gold just recently to buy at the bottom, is going to be moved to MFR. That's the second news. The third news is we're going to increase prices in 2025. So you have a deal until Friday. I would suggest to benefit from this deal because the prices are going up in 2025. That's it. That was
and of course prices will not change for those who are subscribed.
Of course, yes.
Yeah, so great discussion. Actually, I really enjoyed it, and I hope to see you, Matt, more often. So yeah, thanks everyone. I hope it was useful. As always, manage your risk. Think twice before pressing some buttons. And yeah, thanks everyone. Thanks, Rafael. Thanks, Matt, and see you.
Thank you. Thanks for the invite.
Welcome back.